Hi, everyone. I'm Elaine Quijano. The Dow Jones Industrial Average closed down nearly 8% today in its worst day since 2008. As our Bradley Blackburn reports, the drop was spurred by a growing oil price war as the market was already weakened by coronavirus fears.
U.S. stocks nosedived Monday. The Dow fell more than 7%, the biggest one-day sell-off since the 2008 financial crisis.
We're doing the best we can to fly this plane. Clearly, we're hitting turbulence.
A weekend dispute over oil prices between Russia and Saudi Arabia sparked the steep drops. Russia refusing to roll back production even as demand falls amid the coronavirus outbreak. In response, Saudi Arabia is ramping up its own output, causing a supply glut that's bringing down the price of oil.
Two superpowers, the largest, most powerful commodity, going at each other in a tit-for-tat type fashion. That sort of sent everything, into a spiral, kind of like a perfect storm.
Adding to that perfect storm, building coronavirus fears. Within the first minute of trading, the Dow plummeted more than 1,800 points, and the S&P dropped more than 7%. That triggered a 15-minute pause in trading so investors could step back and understand what was going on.
This is a process that we test every single quarter. So it's not something that we weren't ready for as an industry. And you see the industry come together and just operate markets smoothly during times of stress.
There's concern, too, about coronavirus spreading here at the stock exchange. Now guests for the opening and closing bell aren't allowed down here on the floor with traders. They have to stay up there in the gallery. Financial experts expect the volatility will continue, but add Americans should keep their focus on their long-term investment goals.
That's how they should be making their decisions, not on tick-by-tick trades in the market.
Interest rates on U.S. bonds sank to all-time lows today, a sign investors expect the economy to struggle. Bradley Blackburn, CBS News, New York.
Jill Colvin, Natalie Andrews, and Jeanna Smialek join me now. Jill covers the White House for the Associated Press. Natalie covers Congress for the Wall Street Journal. And Jeanna covers the Federal Reserve and the economy for the New York Times. Welcome to all of you. Natalie, let me start with you. 3 more lawmakers announced they would be self-quarantining today, bringing the total to 5. How much concern is there on Capitol Hill about the spread of the virus there?
There is certainly a lot of concern about the virus spreading, especially after Congresswoman Brownlee announced that she would be self-quarantining because her meeting took place in D.C. and it was separate than the 4 who were quarantining themselves because of exposure at CPAC. So there is a knowledge that this is spreading, that we don't know where Congresswoman Brownlee's meeting was. We just know it was in D.C., but certainly aides, lawmakers are very worried that there is an increasing risk of exposure here, and they are preparing for it.
So, Jill, as Natalie just mentioned, this CPAC conference, both President Trump and Vice President Pence attended CPAC, where Representative Gates and Collins were in contact with a person who later tested positive for the virus. Matt Gaetz was just on board Air Force One with President Trump, and we also have video of the president shaking hands with Doug Collins on Friday and shaking hands with supporters in Florida today. Could there be a health concern there?
Yeah, I mean, you've got a case here where not only was the president in contact with individuals who are self-quarantining, but actually was on Air Force One with Representative Gaetz, who just left, that plane a couple of hours ago. This is a president who has repeatedly tried to downplay the concerns here. Earlier today we saw him walking into that crowd as he got off of Air Force One in Florida, shaking hands with all of those supporters on the tarmac, despite the advice from public health officials telling folks not to do that and to limit contact with people, really trying to project that everything is okay. But as we've seen in the last 24 hours, this getting closer and closer to the president. We also had an incident where the president's campaign was supposed to be running a Women for Trump bus tour today in Michigan. Mercedes Schlapp, who is the wife of Matt Schlapp, who runs CPAC, was supposed to be on that bus, as was the president's daughter-in-law, Laura Trump. The campaign decided to cancel that as well, claiming scheduling changes.
Natalie, is it possible that given what is emerging here, we could start to see members of Congress work and vote remotely?
Congress can't vote remotely. right now. Steny Hoyer this afternoon pointed out that fact, and members of Congress are really divided here. There are some members and staffers who point out that members of Congress, a lot of them are in the at-risk population. They're older, they travel a lot, they are nervous about potentially spreading the virus or potentially being exposed and not knowing it and bringing it to the Capitol. There's another group that doesn't want to leave for recess next week. They want to make sure they can pass legislation that could help the American people. And there might be some overlap there. There might be people that are also concerned and also don't want to leave without passing legislation. But I would say those two, there's a real heightened concern here.
Well, Jeanna, let me turn to you and let's talk about this stock market drop. Walk us through why we're seeing these drops now.
Right. So it's really a combination of factors. One thing is that we've really seen growth downgrades across the globe, really, over the last couple of days and weeks as people get more and more nervous about the coronavirus and what the coronavirus's spread is going to mean for the real economy. So that's one part of it. And then the second thing that really took hold today is the plunge in oil prices. That has been sort of in the pipeline for a while as Chinese demand falls off. But as you guys mentioned earlier in the show, what we've really seen is this geopolitical tension flare up, send oil prices just plummeting today. And that really is going to potentially be quite negative for the real economy, really going to weigh on a lot of companies' performances, especially ones that are heavily invested in oil bonds like the banks. And so those two factors together really serve to sort of, work together to tank these markets.
Well, Jill, we know that President Trump is meeting with economic advisor Larry Kudlow, Treasury Secretary Steve Mnuchin, and others to talk about economic relief options. What are they considering?
Yeah, I mean, there are a whole bunch of options at this point that we've heard are on the table. Of course, Democrats have their own wish lists of things that they would like this White House to be open to, things like paid sick leave, things like making it easier for people to get food stamps, things that would make it easier for people who are going through this. So far, things we're expecting from this White House would be a discussion about potentially providing tax breaks for airlines, for some of the other businesses that have been impacted by this. We know that the White House has been inviting Wall Street heads to come and meet at the White House to try to discuss other potential options. And this is being seen by many as really an opportunity for the president to push forward some of the things he's already been trying to push forward. We've heard a lot of talk about this Tax Cuts 2.0 package that the White House has been floating, trying to push, deeper tax cuts than the ones that were passed earlier in the president's administration. So we'll see what they decide coming out of this. But this is a White House that's looking to project an air of calm, looking to show voters that they're doing something, that they're reacting here to try to minimize the blunt of the impact.
So, Natalie, would Congress be required for these economic relief measures, and what options are they looking at?
They aren't required, Elaine, but there certainly are members who are supportive of it. I talked to moderate Democratic aide today who said that he didn't expect moderate Dems to block the effort should it not include a way to pay for it. He compared it to disaster relief or the bill that was passed to support areas after Hurricane Katrina. So that is really how lawmakers are approaching this. They're also open to some tax breaks if they expire. They don't want to pass tax breaks and just have them extend like new legislation. Nancy Pelosi said this afternoon as she came into the Capitol that she would want any sort of stimulus or legislation that would help people to be family focused. And that would include stuff like sick leave or unemployment insurance.
And so, Jeanna, what tools does the federal government have to try to stabilize the situation? And is it clear which steps would actually be the most effective?
I think what we've seen in a really significant way so far is the Federal Reserve actually stepping in and doing a lot of the work towards stabilizing the situation. We saw a 50 basis point emergency rate cut last week. So that's, half a percentage point, pretty significant, and the first emergency cut since 2008. Now, the Fed has relatively limited room to maneuver going forward. They can do some of the things they did in the 2008 crisis, but it's not clear how effective those tools would be when the problem you have is quarantine workers and potentially choked off supply chains, real economy things that aren't necessarily demand side of the economy. So in those cases, what really matters is the public health response, first and foremost, and then secondarily, the fiscal policy response. And so what you're seeing a lot of economists call for is some kind of bigger fiscal policy response, some sort of willingness by the government to sort of step in and help households smooth over their consumption spending in what could potentially be a trying time ahead. And so I think those sort of rallying cries are going to continue into the days and weeks ahead.
Right. You have to wonder where consumer confidence is at this point as the weeks go on and the months go on. I mean, the thing that the administration itself has pointed to is that consumer confidence had been high. We'll see what happens with that. Jill, let me ask you about whether or not we've seen a disconnect between the White House and the Federal Reserve on how to respond to this recent economic news.
Well, I think you've seen a disconnect in many parts of this administration. You know, you've got the president who is out there on Twitter, at least in his tweets today, really seeming to minimize the risk posed here by the coronavirus, while you had the health secretary, Azar, on Fox News telling people, no, we're not trying to minimize this, and offering, advice. You've got the president who has long been pressuring the Federal Reserve to reduce interest rates, continuing to lean on them, saying that that's something that is necessary right now. And a Federal Reserve that, of course, has always been concerned about looking as though it's being pressured by the president. And this is an issue that, we've had with this White House from really day one, that you've got a president with his Twitter feed, with that bully pulpit, who oftentimes is sort of out of sync with the message of many other administration's officials. And at a time of crisis like this, everyone's looking at the White House to speak in one unified voice.
Right. And, as evidenced by that picture of the president shaking hands, even the advice from the health experts would seem to be contradicted by the president's actions there, as, those health experts say, distance yourself and try and practice that social distancing. We see the president himself not doing that in that video. But Jeanna, let me ask you about your article today. It is headlined, "Financial System Faces Biggest Test Since 2008 as Coronavirus Spreads." It looks at the changes made to the regulatory system that could make it vulnerable as the crisis intensifies. Tell us more about that.
Right. So I think one of the things that we know about the financial system headed into what could be a crisis here is there is just a lot of debt outstanding held by corporations. So triple B debt, for example, which is just one notch above junk bond status, makes up 52% of the entire investment grade bond universe right now. So just this huge amount of sort of risky debt, still investment grade, but just barely so. And a lot of it obviously is issued by companies and then held by institutions outside of the traditional banking sector. So places that aren't necessarily captured within the closely regulated banks. So that's a concern in part because the would-be regulator of those institutions, the Financial Stability Oversight Council, which was established in the wake of the 2007-2009 crisis, has really been sort of gutted in the Trump administration. The staff is just not where it was before. And the administration has just not been making the priority of it that the Obama administration did. Now, on top of that, banks are seeing their capital requirements not necessarily dialed back, but certainly made more certain. And what we're seeing as a result, as they have a little bit greater certainty over what's required of them, is that they are holding less capital, or at least planning to. And so those changes all taken together could just leave the system a bit more vulnerable than it otherwise would have been. And I think this is going to be interesting and important to watch as we see what really could be the first major test of the financial system and the financial system safeguards that we've had since the 2007 to 2009 crisis.
And Jeanna, today marks 11 years since the current bull market began in 2009. Are there signs that the bull market is coming to an end? And if so, is that part of a normal kind of cycle, or are there other factors at play here?
I mean, it certainly depends on how you define a bull market. So
Yeah.
if you sort of ascribe to the 20% decline over a sustained basis definition, it is certainly possible that we are going to see that. I think we clearly have to wait and see if that sustained basis is carried out. I think the real issue for markets right now is trying to figure out how long and how extended this coronavirus impact is going to be, and now also trying to game out how extended and how meaningful this drop in oil prices is going to be. Those two factors together, if they continue, could really be a perfect storm where a lot of corporations' earnings prospects look a lot worse than they were, even 2 or 3 months ago. And so if you see an instance like that, you can make a case that the stock market is going to continue having tough times ahead. If we see infections really plateau and this comes under control, then you could, paint a much more optimistic picture. I think a lot of this remains really to be seen. There are huge uncertainty bands here.
So, Jill, given that uncertainty, we've heard President Trump on the campaign trail time and time again tout the economy as a reason that he should be reelected. How concerned are some of the officials that you've spoken with about the political impact of this?
The political impact of this is huge. Look, this is a president who every time he delivers a rally speech, every time he gives his pitch for re-election, talks about how the economy is doing and specifically how the stock market is doing. He's really used it as sort of a measure of his economic success in office. But the problem, of course, then is if you take ownership of that, what happens when things aren't doing well? And what you've seen the president do over the last 24 hours or so is really try to deflect. He's been trying to blame Democrats, saying that they are trying to hype the situation to make him look bad. He's been blaming the media for the way that it's reporting on this and really trying to do everything that he can to distance himself from the impact here. There are a lot of long-term analyses looking at how tightly tied presidential election results are to economic factors. And this White House, the president's campaign, the president's allies across the country constantly point to the economy as the brightest spot for the president, making the case that, even if you don't agree with some of the things the president says, even if you are, a suburban woman, somebody who's on the fence about the president, just look at how the economy is doing right now. And they realize that if the president loses that argument, that can make his election fight much, much more difficult.
All right, Jill Colvin, Natalie Andrews, and Jeanna Smialek, thank you all very much.